Hey everyone, welcome to the KE Report, another daily editorial. This time chatting with Joel Elconin. We're going to be talking about the broad averages in the US, all pretty much right at or around all-time highs. It's a broad-based rally. We also have Bitcoin climbing back towards that $100,000 level. A lot of, I think, positives. A lot of green on the screen that we can talk about with Joel. Joel is the co-host of the PreMarket Prep Show. Click that link in the show notes to visit the PreMarket Prep website. Joel, markets, again, as I said, all pretty much around all-time highs, and it's not just being led by a select few stocks or sectors. Joel, is this environment just simply too good for markets, or do we need to understand that, look, people seem to be making money, people undoubtedly are putting money into the markets. This is just a strong bull market.
It is. It is. Good afternoon, gentlemen. Thanks for having me. You have a lot of optimism. You have the change in the White House coming in January. You have a group of stocks that are benefiting from the new administration. The financials are benefiting. Some of your self-defense stocks like Exxon Enterprises. And then on top of that, I mean, we've clamored for a more of a broad-based rally, right? With the small caps and the mid caps, and they're finally picking up. The IWM, after laboring for 3+ years, is finally back at all-time highs. So people are making more money and they're spending more money.
Yeah, Joel, we've talked a lot this year with you about when would we see that laggard trade, that catch-up trade, and we're finally seeing it. And we're seeing it not just in the small caps, but also in the mid caps, just really across the board. I guess to that point, you just brought up people are spending money. We're seeing some of the retailers doing good too, and we're seeing consumer discretionary stocks popping higher again too. Does that mean people are out circulating and percolating with the money they're making and spending it in the economy?
Yeah, I mean, 'tis the season to be jolly, right? Today with the start of Black Friday, you have some retailers. I mean, there was some haves as a have-nots. Walmart having another impressive report. Target, not so much, but it's a time of the year. There's rotation. XRT, the retail ETF, has been kind of quiet. Finally broke out of the $82 level. These companies also need to have inflation under control. They need to see lower rates that helps out, their spending cost. And looks like you're going to get another quarter point decline, maybe, maybe not, in December. So the fact the consumer has more money, interest rates are coming down. They're boding well for the retail stocks. People are making more money and spending more money.
Yeah, they really are, Joel. But is there an end in sight for this? Is it when Trump takes office that we see a little bit of, I guess, leveler heads prevail because Trump will need to maybe follow through with some of the positivity that everyone has in mind for his policies?
Well, I mean, he comes out, says he's gonna, tariff Canada 25%, and he's gonna tariff Mexico, and he's gonna tariff China, and that, caused a temporary blip in the market. And it's as as though the market doesn't really believe that he's going to go through with these tariffs, because the tariffs are going to be inflationary. The stock that, really took it the worst was General Motors, crossing 60 for the first time since early 20. That took a big hit earlier in the week, but now it's attempting to rebound. It's, the market just is not at this point. They're looking at interpreting the tariffs as either just a total bluff or they're not going to be as bad as what he says.
Well, Joel, just to the point about tariffs, two things. One, a lot of times when you put tariffs on other countries, they're going to put tariffs on U.S. goods, but it also ultimately means goods are just going to cost more for American consumers, which means inflation. The second thing would be, what about international companies that maybe get tariffs put on them and it affects, how they can export their goods to other countries? Could it boomerang back and hurt international companies?
I mean, theoretically, yes, and that's why you have, the to stay into the U.S. markets. I mean, that is where the money's flowing. You saw what happened to the China rally, very, very short lived. This is where people want to have their money here. The dollar's been strong, and you keep looking for other places to invest your money, and it just doesn't really do anything because it's the U.S. markets that are the ones that benefit. Now, if the thing that you got to keep be aware of is inflation, and right now everyone is complacent that inflation is under control. We'll get some more data, I believe, on December 12th. We'll start to get more of the CPI and the PPI data. It hasn't reached the Fed's target of 2% yet, and it's getting a little bit stubborn here. But still, I mean, until you get a major bump up in inflation, which you may see with all the spending that's going on, the path of least resistance for the market is higher.
So true. And yeah, inflation, while the rate of change has stopped in terms of going down, it is more or less it's flat, maybe a little bit upward bias, but again, not spiking higher to scare people. Joel, is this also just a scenario where it seems like the US economically is doing better than almost any other economy out there? The interest rates are still broadly higher than they are in other countries around the world. The Fed has room to keep on lowering interest rates if they want, in the face of still a pretty strong economy. So money, I guess, will flow into the country with the stronger economy, and even on the flip side, still with some of the higher rates if people want those returns.
Exactly. Stability. And I think that's one thing that we talked about, over the course of this year, hike, no end in sight, right? And then, of course, the unexpected turn by the Fed going with that half. But I think what's most important for companies, of course, rates coming down is a boost, but it's stability, right? So they know that they can look out what their borrowing costs are a year out, 2 years, 5 years out, and then, plan accordingly. Also, for investors that don't have the appetite for risk in the market, you can still get some decent returns on your money. So people that don't have the appetite to be in the market are still getting some kind of return as long as inflation stays low.
Well, Joel, let's pivot over to the commodities. Overall, they've been kind of a boring sideways market, whether it's copper, the precious metals, oil, kind of stuck in a range. Nat gas has been a bit peppier, but in general, is there anything catching your attention in the commodity sector?
Well, I mean, earlier in the week, you had the Trump with emphasis on natural gas. So you had the UNG move up. Those gains have kind of dissipated a little bit. But, once again, the Trump trade, drill, is giving a boost to the oil companies, even though the price of crude oil has not responded in kind. With these kind of stocks, you're getting some kind of dividend return, right? A lot of these big oil companies pay a nice dividend, and seems to be favorable policies coming in the administration at the turn of the year. So that's what you're seeing. The natty gas, did get the boost earlier in the week, and supposedly it's going to be, more policies towards that. So when the U.S. government gets behind the sector and our new administration, you have to take note, and that'll be at the turn of the month in January.
Yeah, I find it so interesting. So many other commodity stocks are largely getting ignored by the market, but the energy stocks, I guess investors sure like growth, and that's what they're seeing on the horizon for these stocks. But also a good point you make that these companies do a very good job of returning capital to shareholders. Let's also talk about another sector that, boy oh boy, it seems to be on everyone's radar, and that is Bitcoin. Trump, very pro-Bitcoin. Even large companies, very much pro-Bitcoin. Even in Vancouver, we have our mayor talking about potentially adding Bitcoin to some sort of strategic reserve. The Bitcoin price really close to that $100,000 level, hasn't been able to break above it. Joel, if that $100,000 level is breached, does that bring in more buying in your eyes?
I mean, Biden, the strength has been the key into it. So the projections that people put on the stock, I just kind of look at things like on a daily basis and look for some consolidation. And that's kind of what you're getting. I mean, it's not really giving up this $90,000 area. And it's just a psychological resistance level. So, I had mentioned really the only thing you can use is Fibonacci extensions. But if companies are going to be start putting it on the balance sheet. And in fact, I saw on Twitter that one government official said that the U.S. should sell all their gold and buy Bitcoin. So that would be a run on Fort Knox, and that would be a huge catalyst to the market. But it has a story, it has the government behind it, and it has the attention of retail as well. So it's a powerful combination of catalysts to stand in front of.
Yeah, Joel, and then also I think Elon Musk being featured so prominently as a somebody in Trump's administration with that Department of Government Efficiency, Doge, kind of a wink to Dogecoin holders in the crypto community, is also spiking the punch bowl in the cryptos. But you also brought up gold there, and there is a legitimate discussion about Bitcoin versus gold. There has been for the last 2 decades, but what do you see when you look at the gold chart? It's kind of been just channeling sideways. Any idea if it's going to break out or break down?
It's at a really important point. I mean, it had that run right before the election, and then it had a major run actually since July. So it had the counter move after hitting that all-time high. Pretty meaningful retracement. Now with retracements, it's how much of the move can they take back? Just looking at the GLD that hit a high of 258. You had a breakdown to 236, about a 22-point move there. You take 11 of that, the 247, 248 area. It did briefly hit that, I believe, on Friday, getting up to 250. But with every move, there's a counter move. And now, though it had a red candle for the month of November, I mean, that was the first red month that it had in over 4 months. So the trend is still up, and see if you can regain momentum to the upside and get back up there and test those all-time highs.
Can you take a quick look at that GDX chart? So the gold miners chart had a couple gaps down this month. Those gaps have been filled. Is this a normal correction in what had been a very strong run, or is there something more here, Joel?
No, I mean, I like that. It did have some gaps and got a little bit of recovery, a check back. 44 to 35, that's about a 9-point move. Add 4.5 to that. Get back to the $40 area. That'd be important for the GDX. It didn't really seem to break above its COVID highs like bullion did, but it's constructive. But I think over the next week or two, make sure it gets back up to that 39.40 area. And then, doesn't have to blast right to 40, but, gets that area, has some stability and some consolidation, perhaps build a base there and perhaps go up and revisit that $44 area.
Well, Joel, while you got your technical cap out, I know that the market you follow the closest is really the S&P 500. So when you look at that technically, any support and resistance levels? I mean, we're up over 6,000 here. Can we get to 6,100, 6,200, or
I mean, you know what? I mean, the all-time high is 60.60. We hit that. We sold off a little bit into the close. So, until I see 2 or 3 tops in one particular area and then some consolidation, I mean, you're starting, you had the week, the traditional making the new high for the week, on a Friday. You had that. You had a new all-time closing high by 13, 14 handles. So right now, I mean, I can't put a lid on this market. Of course, there's always, global macro events that upset the apple cart. But right now, I mean, instead of trying to pick a top, maybe try and pick a spot where you'd want to sell into some weakness. Because right now, I'm not seeing anything telling me to get out or the top is here.
All right, Joel. Enough said. Still a very strong market as we head into the holiday season and into next year when Trump does take office. And who knows what next year is going to hold. But right now, boy, oh boy, a lot of gains to be had just from trading a wide range of markets this year, especially at the end of the year. Again, Joel Elconin, co-host of the PreMarket Prep Show. Click that link in the show notes to listen to Joel's show. Joel, thank you as always for your time. I hope you have a very happy Thanksgiving.
All right, gentlemen, we'll talk to you next week.